If you've been investing for a little while and you aren't rich yet, or even worse, you keep losing or at least not beating the market average like the S&P 500, this video is going to help. I'm going to give it to you straight because some of you need to listen up and make a big change. This video may be a little bit longer than usual, but I challenge you to listen to each point, and then by the end it would help me and help others if you'd comment which one of these are you going to work on, or which one of these have you changed in your own investing and how has it worked for you. I'm also going to open up a little bit more about myself in this video so you can understand where I'm coming from and so that you can learn a little bit more about me. Starting with my three-legged best friend, who's also my production assistant on this video, Basher. And if you like videos like this or this type of format from me and appreciate this style, please let me know. So ever since I was in high school, I knew that I was going to be a business owner and that I was not going to have a regular 9-to-5 job. So when I was a senior in college, I figured that I would try to go ahead and buy the company that I was working for. At the time I was working for NutriShop, which is just a vitamin store, and I was big into health and wellness, and so I knew everything about the business. The thing was, I was about 20 years old, and the owner at the time needed $150,000 for me to go ahead and buy the business. Now again, I was a college student, 20 years old, had about $1,000 saved up. That wasn't going to be enough. So I went to all the business banks, I went to all the venture capitalists that I could go to, and nobody wanted to give a 20-year-old with no money $150,000. Shocker. So what I was able to do was come up with $15,000, which was 10% of that asking price. I got that from a family member who I had to pay back later on. So I went back to the owner and I said, look, I'll give you 10% up front right now. Then I'll give you $2,500 every single month until it's paid off. And if I miss 2 consecutive months in a row, no matter how much I've paid off up until that point, you could take the store back free and clear. So if I had paid $120,000 of that $150,000, but I missed 2 months, he could then take the store. What I did there was I bet on myself, and I knew that I could make this happen. I knew that I could grow that thing, and that's exactly what I did. Now remember, I was about 21 by this point, and I had a very successful year, so I thought, why the heck not buy another one and just keep this thing going? I did no research, had a huge ego, just went straight into it and thought that I could just duplicate what I just did. And within about a year, I had lost about $50,000, and that business totally failed. While that was tough at the time, that helped me become more successful in every other part of my life over the next 15 years, and that's what we're going to talk about right now. Since then, I've started 7 or 8 businesses, leveraging the information that I learned from those first 2 businesses and lessons that I learned from one business to make the next one better. And even more important is what this means for personal finance and investing. I owned a gym for 10 years and recently sold that. I've built a marketing agency, a management consulting agency, worked in private equity, was an executive in a global company, have been a university professor for over 7 years, and I've helped hundreds of clients through personal finance and investing through my one-on-one private financial coaching. I decided to keep teaching as a professor because I see a deep flaw in our education system where we're not teaching young people how to use money, what that means as a tool, and how to take control of their financial literacy. I tell you all this to let you know that I've done and seen a lot, and I'm also using the experiences of others from those that I've been networking with or coaching to give you a better perspective on both what people are messing up and also what they're doing great in order to build that wealth. I'm going to go over 5 key things that I keep seeing come up in my private financial coaching that once these people fix this, their net worth goes through the roof. The clients that I have that don't make these mistakes are head and shoulders above everyone else. And these might come off a little bit brutal, but you know it's all love, baby. Okay, the first one, you keep making the same mistakes. Gaining the market return of 8 to 10% is amazing. If one has $50,000 and adds just $500 per year for 25 years at 10% per year, that person will have over $1.1 million. But if 10% is good, then 15% is better, right? Why not go for 20%? Or what about hearing that Nvidia is up 138% for the year? So you want some of that action and buy in, but then it goes down almost 8% in 1 month. Or you hear about the 5 stocks that you must invest in today, and the person on YouTube seems pretty credible, so I'll just follow what that person has to say. Or you invest in 50 different stocks and have a bunch of different positions in your portfolio, and it makes sense at the time when you're buying it, but then when you go back a month or two later, you forget why you even have some of these and everything's just super confusing. What you need to do is go back to the start and ask yourself, why am I investing? What's the overall goal? Do I want to research every single week and stay on top of these companies? Or do I want to simplify everything and make my life just a little more peaceful while also making some extra money? If you do want to pick stocks and you want to try to beat the market, there's nothing wrong with that. Just expect to do a bunch of research and continue to do that. For 95% of you, I don't think that's what you want, so you may like my investing simplified approach with my simple and effective 3-fund portfolio. Number 2, why you aren't reaching the stock market yet. You haven't set yourself up for success. This is a tough one to hear and a boring one to actually do, but it's the sole reason why I see the people with the highest net worth in my private financial coaching sessions are the way that they are because of this specific thing. Say you have $100,000 in the stock market and it has a bad year and it went down 20%. Now you have $80,000 in the stock market. If you have to sell because you have an emergency come up, then yes, at that point you've lost money. If you're diligent and you have money somewhere else, like a savings account or just something outside of the stock market, then you can use that money to cover that emergency. And that money that just went down in the stock market, technically you haven't lost yet because you haven't sold it. So you can let it ride and come right back up. And then at that point, hopefully it will be in the positive. Having an emergency savings of at least 3 months worth of living expenses is so essential. So start working on building that today. If you can get to 1 year's worth of living expenses, that will be such a wealth cheat code. The other thing you need to prioritize right now, even over investing, is getting out of consumer debt, like credit cards or anything high interest. Number 3, and some of you may feel attacked here, but you just have too much pride to reach out. I'm a pretty good athlete in the sports that I've played. Soccer, football, CrossFit, and jiu-jitsu, I've competed at a very high level. But recently, when I wanted to actually get better at this little game called pickleball, I had to swallow my pride and ask my girlfriend for some help. She's an absolute stud at anything she does, but especially pickleball, so she helped me get much better very quickly. I'm still not good, but I'm 10 times better than I was a year ago, and it's all because of her help. And side note, that's actually how we met on the pickleball court. I saw this cute girl on the other team, and I thought that I could wow her with my athleticism, and then she proceeded to beat the absolute crap out of me quite easily, so naturally I had to go talk to her after the game. But that full story might come in a different video. Hear me out. Every single person who has a net worth that you aspire to have did not get there alone. Whether they worked with me for a year in some private financial coaching, or they had a mentor, or they looked for books or courses or something, the people who have the most wealth do the research and they usually just go directly to the source. Talking to a consultant or coach can seem expensive, but you need to zoom out. You can't look at it like you're paying $500 or $1,000 for an hour of somebody's time. You're paying to soak up all of the hard work and lessons and knowledge that this person has accumulated for the last 10, 15, 20 years. You get to pay only $500 or $1,000 for 10 years of their work. Think of it like this. If I could give you 10 years of your life back and your investments go double, triple than what you could have done by yourself, and we can get that done in 1 hour, how much would you pay? The poor hold on to their pride and worry about pennies while missing a bunch of dollars. It's why the largest companies in the world pay hundreds of thousands of dollars for McKinsey or Bain to come consult on a problem for them rather than doing it themselves. They know that those consulting firms specialize in these areas and will make them 10 times that investment long term. Reach out for private financial coaching to make you a plan, get a second pair of eyes on your investments, or just make sure you're on the right track to building the portfolio and life of your dreams. Email me at ProfessorG.invest@gmail.com. Number 4, you don't know yourself. Now this one's tough and it takes a lot of introspection. And no one knows this truly other than you. It's why I tell you all the time to do your own research. I start the process off for you and I give you ETFs and stocks that I really like or that I see and that I'm following, but they may not make sense for you and your investment strategy based off of all of your goals that you're trying to get to. I don't invest in Meta or Nvidia or Tesla, and over the last 3 years, they've been crushing it, and I've technically missed out on a lot of money. But I know that my portfolio is already moderately risky by owning businesses, having real estate, physical real estate, owning a little bit of Bitcoin, and having those growth ETFs in there already. I know how much risk I'm comfortable with, and I know what's gonna help me sleep at night. Investing is about consistency and sustainability long term. Figure out your risk tolerance, your goals, both short term and long term, what you truly care about, and then what you couldn't care less about in this world of investing. And then get brutally honest with yourself and make your dreams come true. This last one, and number 5, kills more portfolios than any of the rest. And this one is that you want to win rather than actually get rich. From the example from before, when I said 10% for 25 years, that's like investing in the S&P 500 with its historical average appreciation over 10% with dividends reinvested. Many people are not okay with this though, not because it isn't good, but because for some reason they feel the need to actually beat the S&P 500, which I don't know where this comes from. Things that can go up very quickly are also the same type of things that can go down very quickly. If you choose an asset that's supposed to go up like 40%, like CrowdStrike, which has gone up 40% per year on average since its IPO, but then crashes like it has and is actually down over 40% in 1 month. You don't need it to go back up 40%. You actually need it to go back up 70 to 80% in order to be back to what you originally invested. If you have $100 and it goes down 40%, that's $60 total now. If it only goes back up 40% from there, $60 times 40% is only $24. So now you're at $84, not $100. Also, who cares if you beat the S&P 500? There isn't a prize or a medal ceremony. You're not Simone Biles out here taking home gold in women's gymnastics. Also though, shout out Simone, you crushed it, girl. But I've said this throughout this video a bunch of times. You need to figure out what you actually care about and what matters to you and why you're even investing. You don't want to win. You want to make money, and you want to do it consistently and sustainably so that you can build a life that you can have some peace and that you can go out and do the things that you want to do when you want to do them and not be on anybody else's time schedule. My favorite simple way to invest is in the 3 fund portfolio that I go over in multiple videos on this channel. So check out this video here or check out this one to keep you going strong in your investing journey.